Good morning, class. We are Group 5 and we have prepared a financial performance analysis and strategic recommendation for G4S Botswana. I will be reviewing their financial report for the year 2023-2024. I am Kebame Sethono. I'm with my group members, Mr. Ngoni and Mr. Mosimanegape. This is the structure of our presentation. We've already done the group members' introduction. We have the executive summary and introduction, the G4S financial performance evaluation, strategic insights for management, recommendations, and conclusion. So let's start. G4S Botswana is one of the prominent security companies locally. The company is highly trusted by several entities, including the government, some of ourselves here, and private sector. G4S provides security guidance services, cash solutions, and facilities management. The company has about 3,000 employees delivering this aforementioned services, and our report will assess the financial standing of G4S for the year 2023-2024. We will investigate 6 pivotal financial decisions for management strategic emphasis. These are backed by our pertinent academic and practitioner research. Executive summary. G4S Botswana reported mixed financial results in 2023-2024. The group saw a revenue increase of 7.1%, mostly due to the main guidance services, even though they were decreased in cash and electronic services. Nonetheless, rising costs from a minimum wage increase and inflation, along with impairment losses on trade receivables, led to a net loss of 14.4 million, worsening from 12.3 million from the previous year. This report will assess the financial status of G4S, emphasize the significant performance areas, and offer actionable recommendations designed to enhance profitability and shareholder value. So the financial performance evaluation will be looking at profitability, liquidity, and gearing. To start with revenue growth, the group achieved a revenue increase from 214.84 million in 2023 to 230 million in 2024. This represents a 7% uplift, primarily from the main guarding services. That is the core service of G4S to provide guarding services, social security. So this correlates with strategic pricing adjustments in response to a 23.5% rise in minimum wage and effective customer acquisition efforts. This was from the annual report. Going on to the profitability ratio, the gross profit margin. The gross profit margin will measure how G4S delivered its core service at the same time managing the cost of sales. We can see from the graph that 2023 it was 17.5 and 2024 it's 17.9. This indicates a slight increase. It shows a slight increase, which indicates improved efficiency in delivering services relative to the revenue that G4S retains. Also, Brigham and Ehart say that with this kind of statistics, it demonstrates a healthy operational margin on cost control. Moving on to net profit margin. The net income G4S earns as a percentage of its total revenue. That is the net profit margin. So the formula, you are going to have the net profit margin. You are going to have the net profit divided by the revenue. Because it's percentage, you are going to multiply it by 100. So despite from the graph, we see that it was 0.57, almost 0.67% in 2023. and 0.7% in 2024. So despite gross profit improvements, net loss increased, suggesting that administrative expenses, interest costs would have been factors that led to the net profit margin increasing. I'll pass on the baton to Mr. Ngoni to proceed. Thank you.
Good morning, class. My name is Lingani Ngoni. I will continue with the G4S ratios, performance ratios. Return on equity. This shows that G4S effectively used shareholder equity to generate net income. This means that the negative and worsening ROI reflects the company's inability to generate returns for the stakeholder, damaging investor confidence. Poor ROI is a red flag for firms operating with shrinking equity. Rosset and others in 2022. There's a decline in return on equity for G4S. Yeah, there's a decline on return on equity for G4S, as we can see in the graph. The balance scorecard for performance ratios. Then we got the strategic objective, the critical success factor, and the performance indicator. The balance scorecard for G4S can better understand how the client satisfaction directly influence revenue, cost control, and profitability. And in monitoring these KPIs, support strategic decisions that align with financial performance and with customer-driven service improvements. As we look at our balance scorecard, the strategic objective is to improve customer satisfaction. The critical success factor is service reliability and responsiveness. The KPI for that thing is customer satisfaction index. To increase the increase client retention, quality service delivery, and the KPI should be client retention rate. Enhance service efficiency, timely incident response, average response on time, reduce client complaints. The CSF is a proactive service recovery. KPI is the customer complaint rate. Then the strategic objective for build brand loyalty. CFS is the customer advocacy. KPI is the new promoter score. Liquidity ratio. Liquidity ratio evaluates the firm's capacity to meet short-term obligations, that G4S ability to pay debts within a specified period, month, for example, employee salaries and benefits, accrued expenses such as rent and water, utilities, water and electricity, accounts maintenance and supply accounts. Quick ratio, as one of the liquidity ratio, measures G4S short-term liquidity, its ability to cover current liabilities using assets, excluding inventory. That's the formula for quick ratio or asset ratio. When we go to the interpretation for the quick ratio, G4S can likely to cover short-term liabilities without selling assets, suggesting strong liquidity resilience. Belupa and Healy and Peak 2020 say the quick ratio measures the company's ability to meet short-term liabilities with its most liquidity asset. We can see that in the graph there, that in the table, that in 2023 it was 0.66%, then it went up in 2024 to 0.77. Gearing and capital structure ratios. These ratios assess financial leverage on how the company relies on debt financing. Equity to ratio. It shows how G4 is financed by debt versus owner's investment. That's the formula for debt to equity ratio. The interpretation means that the firm's rising ratio shows that increasing reliance on borrowed funds, a moderately high leverage level that increases returns, but also risk, especially in the industries with long billing cycles. Higgins 2012 suggests that excessive gearing can deter the investors. Equity ratio shows that how G4S financial stability in the long term is resilience. Formula for that is equity ratio equals to equity divided by total asset. This means that in only 57.6% of 2024 total assets were funded by shareholders, suggesting reliance on external financing. Investors may expect high returns to justify the risk and less dependence on borrowed capital. Belupa and Healy, 2008. This graph shows that how the equity ratio were tabled. Interest coverage refers to a KPI of financial solvency and credit worthiness in meeting payment obligations. That's the formula for interest coverage ratio. In the interpretation is that G4S interest coverage ratio is negative in both years, indicating that EBT is not sufficient to cover interest obligations, indicating that a very weak debt servicing capacity. Penman 2018 suggests that a low ratio may show liquidity potentially default risk. I'll hand over to my colleague, Mosimanegape.
Okay, thank you very much, Mr. Ngoni. So guys, I will take you through return on investment. It depicts how G4S effectively uses its total assets to generate net profit, and also it resembles the overall performance of the company. This graphical presentation shows that in 2023, the company recorded -7, and in 2024, the company recorded -9. And this deterioration suggests inefficient assets utilization. The company is failing to generate adequate returns from its asset base, which may indicate a poor investment strategy. And this is basically our summary of financial ratios. Assets and liability structure. A company's assets and liability structure illustrates its capital allocation, solvency, and liquidity profile. Grasping how assets are financed, whether through debt or equity, and how well current assets are managed is essential for sound financial decision making. Therefore, in 2023, G4S experienced a decline in total assets from 151.7 million to 143.7 million in 2024. And the contributing factors are asset disposal, reduced investment in capital projects, and depreciation of existing assets. And also, shareholder equity dropped to 13.2 because of continued net loss. Non-current assets. A noticeable decline in property, plant, and equipment in 2024, dropping from 117.9 million to 109 million, suggests possible asset disposal or depreciation. The decline reflects limited investment. As a result, too much reliance on leased assets may offer flexibility but signal capital constraints. Strategic insights for management. The group can maintain strong cost control to boost net profit margin. And also, they can monitor debt levels while leverage boost of return on This is a return on equity. It exposes the firm to interest rate risk, enhance asset efficiency, which may significantly raise return on assets by reviewing underutilized fixed assets. And lastly, the company can strengthen the equity base over time to reduce gearing and improve solvency. We recommend that the group can manage debt and financial controls, operational and cost efficiency, revenue growth and diversification, capital structure and financial risk, market shareholder engagement. These are some of the recommendations that we recommended for the group. And lastly, we have the conclusion. Despite facing economic and operational hurdles in 2024, G4S Botswana has a solid foundation for financial recovery. The strategic implementation of recommendations, including cost efficiency, revenue diversification, capital structure optimization, and stakeholder engagement, can greatly improve the company's financial performance, resilience, and shareholder value. Strong leadership, data-informed decisions, and ongoing performance tracking will be crucial to achieving these goals in competitive security service sector. So thank you guys. Now you can ask questions and comment.
So how does G4S continue to enjoy revenue growth despite the rise of other competing security companies such as security systems, like Pure Securities and others?
Okay, thank you very much. I will pass that one to my colleague.
You are talking about the retention rate.
The revenue growth.
The revenue growth.
This is because G4S G4S Botswana is part of the group, an international group. So when you are part of when you're under a group, you sort of get like a template and then you localize it to your area. So they localize products from UK to Botswana. Products like your cash solutions. Initially Medicine, so they localized it. So that's why you see them continue to enjoy revenue growth. Thank you.
From your analysis, from your financial analysis, why is G4S trying to showing rate hike?
G4S retention, you are talking about the retention rate.
Yes.
G4S has become a leading cash in transit company in Botswana. Its client base is because of responsiveness to incidents. Thank you. Any other questions?